Hello, everyone, and welcome to your Money Q&A question of the day. I'm your host, Stacy Johnson, and this question is brought to you by MoneyTalksNews.com, the best in personal finance news and advice since 1991. Here's our question. It comes from Frank. Frank says, which investing option do you prefer, purchasing stocks that pay dividends or the mutual fund approach? So Frank's asking whether we like stocks or mutual funds best. You know, I used to be a stockbroker for about a decade, and I used to buy stocks all the time, and you would think that I'd make a lot of money buying stocks, wouldn't you? I didn't. I lost money almost every year doing that. Sounds counterintuitive, but now I make a lot more money since I got out of that business buying stocks than I used to as a stockbroker. Why? Two reasons. One, because I'm not chasing stupid rumors like I did when I was a stockbroker. I'm buying quality stocks instead. And two, I'm not trading as often as I was tempted to do as a broker. Now I just hold on for long periods of time. Now it's rare that I lose money in stocks, but boy, did I lose a ton when theoretically I should have been at my prime buying stocks. Anyway, that's beside the point. Let's go back and take a look at our question. There's three things I want to tell Frank. One, buying individual stocks takes a lot more work than buying a mutual fund. A mutual fund, for those of you who don't know, is just a basket of stocks carved up into little slices. So instead of owning one stock, you own a whole bunch of different stocks. That's a lot less risky. So anyway, buying stocks takes a lot more work because it's not diversified. You're putting your eggs in one basket and you're hoping that basket does well. So you're going to do a lot more homework to make sure that it does. Make sense? Okay, number two, buying individual stocks, as I just implied, is riskier. The more diversified you are, the less likely you are to take a huge hit from one company's problem. Like I own GE, for example, as a stock. Did really, really well. Bought it really cheap right after the Great Recession, or during the Great Recession, and it did really, really well. And then all of a sudden, they announced some crummy stuff, and now the stock is half what it was. Now, in a mutual fund, that wouldn't affect me as much. But when I own just that individual stock, it really hurts. So stocks take more work, and stocks are riskier, individual stocks versus mutual funds. Final point. It is harder to hit a home run with a mutual fund. One of my biggest winners is Apple. I paid about $1.50 for it in split adjusted terms, and now it's worth $179. So you can hit a huge home run with a stock when you're right, and that's harder to do with a mutual fund because it's a big basket of stocks. Does that make sense? So buying individual stocks can be a way to make a lot of money if you get the right stock and you get it at the right time and you hold it for the right length of time. So my advice to Frank is, I would say that mutual funds are probably your best bet, but there's nothing wrong with taking a flyer, but investing in a stock or two to see if you might be able to hit that home run. In other words, why not do both? But I would put the lion's share of my investment where it's safest, which is in a mutual fund. Okay, that's our question for the day. We're going to quit with a financial expression, which we do every day. This one comes from Will Rogers, and it's also one of my favorites. Too many people spend money they haven't earned to buy things they don't want to impress people they don't like. You like that expression? Keep it in mind, use it all you want, and I'm going to see you here next time. Make it a profitable day.